Hey everybody, Tim here. It is Monday, Memorial Day. Hope everybody's enjoying their day off. I've got a little bit of a sinus infection from that hospital stay on Friday. Bear with me, I try not to cough, but this is going to be a really quick video anyway. Um, as I was saying for a couple of weeks when I was early saying the bottom is in, we got that overextended fifth wave and we broke down below that level there, that 41-14-65, which was when Russia invaded Ukraine. And when we had come down here to that 40.62 back here in April, that was when I started to really get aggressive and say, that's it, the bottom's in, the bottom's in. Uh, we had a nice looking wave for what we had. Obviously, that didn't work out. You had the FOMC spike to 43.07. And then we had that massive drop off for the last 2.5 weeks, which a lot of guys that don't know how to position themselves correctly or never saw a correction before and were thinking that everything was, going to come up smelling like roses, didn't work out, and those guys are gone. That happens every correction. That's what corrections are for. The stock market doesn't owe you anything. It owes you nothing at all. The entire idea of the stock market and the algorithms are to hurt as many people as they possibly can. And that's what you had. And you saw the same thing happen this week as we started to get that bounce. And then we got a lot more aggressive into that bounce as we went into Thursday, as we went into Friday. But before I leave here on just this daily standard basic chart, what you see here is obviously the RSI on the SPX daily has gotten overbought. It's the first time it's gotten overbought since we had that run up in March, which everybody remembers was around an 11% run. It was overbought just as we went into the end of the year and posted that new all-time high with the sell divergence. And it got overbought on that little spike that we had to 45.95 back in February. Well, that's where we're at again. So are we looking for more downside? Are we looking to get out of the 3800s and go down there into the 3600s? And again, I'll have to pull it up and show you, but I would suggest the answer is no. I would suggest that the answer is that the bottom is in, that like we saw on the examples that I showed of when you had 6 consecutive down weeks and even the 8 consecutive down weeks, which only happened twice. We just finished with 7. Your next 1, 2, 3 weeks tend to be inside weeks where you don't really break out above the prior week that ended the streak, but you also don't break down too far below it. Now, obviously, we've ended this streak. We've got a massive candle coming back up here above that 41.15. 2 big days, Thursday and Friday. NASDAQ, exact same look, very shy of where its bottom is, which is 13,000. Very shy of that. So we still do have a little bit of caution to look at because the NASDAQ, as you know, is your weight, it's your power, it's your legs. So a little bit of caution to go with that as far as not being overly aggressive and going, okay, yeah, that's it. Everything is over. There's no more dips. Now we can start cruising back upwards again. Again, also here on the VIX. We got the VIX to break below 2884, but the VIX has not broken down. And even here, I'm watching it right now. The VIX has not broken itself down to where we're down into these low 20 levels. So, again, a little bit of caution that needs to put together with that. But before I do go over onto my charts, just want to show you here the month of May. Now, obviously here, since April 25th, we've been greater than 10% from the all-time highs every single day. We had that one little hit where we came down last week on Friday where we broke below 20% from the all-time highs, and since then it's been a pretty good gravy train to the upside. We had a 283 point range last week, greater than any of the weeks that we had during the streak that was to the downside. 283 points from our low of the week to our high of the week. So this is a pretty big number to consider because when you're in doing any kind of calls or puts, and especially on spreads, that range has a lot to do with where your ability to be able to cash in and cash out are. And, we've only had an 80 range, a 90 range, a 74 range, but these last 3 days, Wednesday, Thursday, Friday, were just massive upside days. So, again, it's a little bit of caution that we're not out of the woods yet, but we are definitely starting to look a lot more promising. And I'll bring you in here. These are the 4 futures. And yeah, this really isn't going to help even if I go here. Yeah, hang on one second. Excuse me. Um, Here we are. The yellow is the upper Keltner that I have with a customized code. And as you can see, when we had this hit over here on Thursday, that was the first visit that we had since we made that run to 4307 back in March. Then we broke above it here on Friday. And again, breaking above the upper Keltner, I haven't seen that all year. And here we are overnight into the holiday. We're grinding upwards. Right now, we're up 1%. We're up 44 points. So again, when you come over and you look at it from an SPX point of view, I was looking at 3 being somewhere around there. Right now, we'd be opening up somewhere in this area, right around 4,200. So definitely above that 4153. I'd look for this 4 level, something to come down below that 4115 into this 4050. Not on Tuesday, because Tuesday, tomorrow being the end of the month, they're going to fight and make sure that that candle for the end of the month is a green candle. But very possibly on the Wednesday or the Thursday of this week to come down here into this 4115, 4050 area. And then from there, June, there's not much out there for June other than discussions. There's no earnings. It's the end of a quarter, the end of the first half. So the move up here to 4309, which I've got, if this is a bullish 5 waves up, we're definitely looking at that coming in much later in the month, probably closer to OPEX than we would be having anywhere as quickly as we had this 283 points here. So, I could see this being a choppy little zone here, 4,200, 4,100, 4,050 over the course of the next 1 or 2 weeks. But this is what we're looking at. 4115, as I've shown prior. I'll zoom out here. I've got you too high up. But 4115 is where you're coming here off of your Russia low back here in February. So this will be a primary spot right here to keep an eye on that it continues to support. I mean, obviously, you've got some higher ones here. We haven't really reached up here enough to be able to go and touch that January low level, but obviously this will be your base point, 4115. We can build up a little bit of volume in here and some support. Then we can start working on that 4220 over there from January and start breaking up there until eventually we can break up above this 4309 and have that become our support. But yeah, for now, this is definitely looking very good as we're coming into the start of the new month, the end of May, as well on Tuesday. And with first day of the week being a Tuesday, nice that if we could get that nice little dip, we could be all good and gravy. And just to look at the dip from a standard point of view here, zoom in. And again, I've got details, so I apologize. 4100 right there, that's where your lower Keltner is on the ES. So again, that supports that 4115 level as being your low line. And at the same time, because we are looking at this being the end of the month, I would definitely be looking at getting a close somewhere around that 4130 to preserve the candle and have a green month. So, yeah, guys, I'm going to keep this quick. I apologize. And today's also what would have been my father's 80th birthday. So, me turning 50 in a couple of months, there's a lot of reflection going on today. And anyway, guys, have a great day. Have a great afternoon, great evening. Enjoy your Memorial Day picnic if that's what you do. And I'll see you guys in the chat room tomorrow.